Welcome to the PlanStrongerTV Market Update for the 6th of May, 2026. Let's go ahead and take a quick look at the numbers. We'll look at the 2025 numbers, total return, put those on the screen for you, just for comparison. Now let's look at the year-to-date numbers. Strong performance across the board on the indices that we follow, except for bonds, they're basically flat. Notable, of course, you see small caps jumping out over 15%. And what do we got? That's a small cap. Okay, I'll get my story straight. Small cap up 15%, foreign stocks almost 10%, and I wanted to get to the NASDAQ up also 9%. Now, here's what's interesting. We are about 1/3, just over 1/3 through this year. So one of the things that we remind you often about these numbers is that they are raw, not annualized numbers. The numbers you're looking at for 2025 are the total return for that entire year. So that's an annual number. But the year-to-date number for 2026, it's 1/3 of the year. So if you want, just for a simple comparison and kind of think about where we are, you can take all the numbers in this right column for 2026 year-to-date, and you can multiply them by 3 to get an equivalent annual return. Now, I caution you about, taking too much from that, because if you do that, for example, with small caps, that means that small caps annualized are up 45% for the year-to-date period if you look at it as if it were the total return for the year. And you say, well, wow, that's really clobbering last year's performance. And the answer is yes, it would be, but just be careful when you do that not to take too much because, of course, prior performance isn't necessarily indicative of future results. So with that nice big fat setup, Robert, let's talk about what is driving some of these numbers. And I know one of the things that we have to talk about is employment. Employment and we have a spending economy. And so where do you see the employment data fitting into the story that, the market's doing well so far year to date?
Yeah, we have so many metrics and economic indicators we talk about on the show. And I have to say, over the last several days, I've been looking at the data that comes out as I usually do. And just these different employment metrics, I said, David, we need to talk about the labor market, employment. For this episode, I want to say, so yesterday the JOLTS came out, Job Openings and Labor Turnover Survey. Every month by the U.S. Department of, the Bureau of Labor Statistics puts out this metric, and it's not just one, it's a whole report. But a few noteworthy items. Number one, 5.6 million people finding employment last month. That's 655,000 more than in February and more than made up for the negative number that we saw in January. So a strong report there. And by the way, it was consistent with March's employment numbers, which showed 178,000 more jobs created. That's a different report released earlier. And then hot off the press, David, this morning, yet another employment report, ADP employment change for April. Expectation was for 99,000. In March, we got 62,000. Today for April, 109,000. Beat expectations, beat the prior month. So a lot of positive data in terms of people being able to find jobs and employers hiring people.
Excellent. And that is kind of the key point, but I can't resist. I have to ask Robert a question based on what he shared. Is it necessary to delineate between job positions being created? We have this new job that we need to have filled, and that is a creation of a job. We're just trying to get somebody in that position versus people becoming employed. Those are two different things. Is that really important, or is it really better just to say, look, we're going to track how many people are getting jobs, period, and versus the ones that maybe have lost their job, quit their job, and I know you'll get to that. Is it really about looking at the net gain in the number of people that are employed?
Well, it really depends on how you look at it, from where you're looking at it. Yes, on one respect, it is very important to differentiate between those two, because it's one thing to have, hey, we have a new job, versus somebody who is filling a particular position that an employer needs to be filled to increase their productivity, et cetera. So in a way, yes, it is important to differentiate between those. But I'm glad you brought that up, because that is an important distinction or delineation to make. And the fact that, one of the things we have, is, oh, well, do we have a very tight labor market? Are there jobs available? And the answer is yes. According to the job openings survey, the JOLT survey, there are about 56,000 fewer jobs that were available now than there were last month. But the number of jobs still available right now is 6,866,000 positions.
And that's not because there's something wrong with the economy. That means a lot of those positions were filled.
Or need to be filled. Those are openings. So
right.
These are employers. So for all the employers, they say, hey, we have 6.8 million plus openings that need to be filled.
Isn't that a sign of an economy that is growing or trying to grow, if we can get those positions filled, and if those people can gain employment who maybe are not? Let me ask this, Robert. Do you have an idea of, here's how many positions are available, here's how many people that want to work and don't have a job?
Yeah, that's called the unemployment rate. Yeah.
Okay.
And also, there's also kind of a corollary to the unemployment rate is the participation rate. And so right now, the participation rate, and has been for a while, has been around 68%, 67%, definitely below 70. But you're telling me that 30% or more than 30% of the people, and the participation rate looks at people who are able, capable of working, that those 30% of our population in this country that are able to work are not working? And the answer is yes.
Because they choose not to work.
Correct, yes.
They aren't taking a job.
Correct. And remember, the unemployment rate measures the ones who are looking for a job. And by the way, the unemployment rate last month went down, I believe, to 4.3% from 4.4%. So that means more people either got out and said, you know what, I'm not looking for a job, or found employment, one or the other. But the most important takeaway is that the unemployment rate is people who are actively looking for a job. If you're not looking for a job, if you're just sitting home you're not considered unemployed.
What is the current unemployment rate?
4.3%.
Okay, so let's just make it 4%. That means, if I heard you right, Robert, that 96% of people who want a job and are able to do a job have a job.
Yes.
And then we're ignoring the 30 or so percent that you mentioned who are not actively seeking a job. They still are not employed, but they're not part of that. So I think also, having 96% of people who want to have a job, that speaks very strongly for the job market and the economy.
Yes, and let me just put out one more thing, which I love the JOLTS report. I mention it frequently in our reports, at least once every 2 months. But they have something called the job quits, the JOLTS job quits. And that increased this month by 125,000 people. So it went from just over 3 million to 3.171 million. What the heck does that mean, and why is it important? So that means 125,000 more people quit their jobs in the past month. People might be saying, wait a minute, then they're unemployed. That's not good. No, an increased rate of job quits means that employees are confident that they can get a job elsewhere, perhaps for better pay, better benefits, whatever the case may be. But the point is, they are confident that they can find a job elsewhere. Therefore, they're quitting their current job. So when you see the job quits rate increase, it says, wait a minute, there are jobs available and employees are confident of finding another job. So that's yet another kind of feather in the cap of today's labor market. Now, obviously, everything's not hunky-dory. That's not the purpose of this report. But the purpose of this report is to show that if there are news cycles saying, oh my gosh, our labor market is tight, it's very difficult, the data really does not jive with that what's the word I'm looking for, David? Narrative. Story. Yes, exactly.
Yeah. Well, we'll leave it this way. 96 out of 100 people who want a job have a job. I think that's pretty good. So is there anything that can kind of mess us up? With what we're seeing with the employment and the things you're sharing, Robert, that all kind of come into this picture about employment. Is there anything on the horizon that can derail the progress that's being made?
I don't know about anything on the horizon, but higher taxes, which constrain employers, which will lead to layoffs. So higher taxes can throw this labor market under the bus. Higher regulation, especially on supply side. And I mentioned supply side for a reason, because energy prices, Strait of Hormuz, the Iran conflict. I mean, oil prices are elevated, but they are not nearly as high as they could be if there were more regulations, or especially if the same regulations that were on the energy industry a year ago were still in place today, or a year and a half ago that are not in place to this day. Letting supply side increase the capability to increase supply, which puts downward pressure on prices. So it's not all demand side, it's demand side, supply side. So constraints on either one, that would throw the labor market, increase unemployment, and therefore make our labor situation look a lot worse.
Okay, well, real quick, regulatory increases don't look likely. Taxes increases don't look likely. Oil and energy and the resolution of the the Middle East situation with Iran looks likely. So the potential impact on labor is, in my opinion, not that high. So we should see, unless something comes at us really out of the blue or sideways, continued, either where we are now or some continued strengthening going forward.
Two-word summary, David: stay invested.
Okay, stay invested. At least till you come back for another market update. No, stay invested. And our purpose is to just help you see some of the things that are going on, provide some commentary, and then you think about it and how it applies to your situation. But as Robert said, let's keep a steady hand on this and not react to the news of the day, or even, as we refer to it, some of the narrative, or saying it more plainly, some of the storytelling that goes on because there's somebody trying to get a message across. And so try to always look at the data like we do. And if you do that, you will plan stronger.